Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase, a podcast where we help you focus on market events that we believe truly matter. Now overnight, it was a sea of red on the screens once again as US markets came back from a long weekend. But a few sort of events, I think, which stood out. The most notable move, of course, was that US bond yields rose further as the focus remained firmly on how quickly the Fed could remove accommodation. Now, the 10-year reached 1.87%, but actually all the attention was on the 2-year bond yield, which rose above 1% for the first time since February 2020. Now, on the equity side, technology, of course, bore the brunt of the sell-off, and the Nasdaq index is once again close to the 10% correction level from its recent peak. That, of course, is one big driver, but possibly earnings disappointments we had in the financial sector most probably contributed to the weak sentiment overall. Now, this US market weakness, of course, followed what was already some softness through Asian and European markets earlier in the day, with the technology sector similarly leading the move lower in those regions as well. Now, the one exception, of course, was the energy sector, which was supported by oil prices, which are now at about a 7-year high. Some of that rebound, of course, followed reports of a new attack on oil facilities in the Gulf. Now, there's an awful lot to unpack here, but in terms of looking ahead on how markets might evolve, we'd really focus on 4 things. The first is that it's a good time to remind ourselves of the context we set in our Outlook 2020, that a move to normality does involve greater volatility, and it's possible that's exactly what we're seeing at the moment. Second, we're reaching the point, though, where positioning may be turning considerably more favorable. There are a number of data points supporting that case, but one good example is the fund manager survey that showed that the overweight to the technology sector, for example, has now been cut to the lowest level since 2008. Now, on the equity indices, the other thing we'd keep a watch on is technicals, and specifically whether our expectation of an intact uptrend does continue to hold. And I think the Nasdaq, of course, being the key index here, given it's the closest to testing its 200-day moving average. And finally, on oil, I think just the one thing to keep in mind is that market history shows us the response to a geopolitical event, like the one we've just seen, can actually be quite short-lived, especially when there's no long-lasting impact on supply. Demand growth and how supply keeps up, that still is the key to how oil prices evolve from here. Now, in addition to these 4 factors, there are a lot of upcoming central bank meetings, and since that's the market focus, those we think will still be key. The Bank of Japan, of course, left policy unchanged as expected. We do have the ECB meeting later this week and the Fed meeting next week. That one, of course, most probably be likely to be the most closely watched from a signaling perspective, and specifically how any of those signals stack up to what the market's already priced in. We'd also keep a close eye on the PBOC as well, given we had one policymaker quoted saying the Chinese central bank would consider rolling out more measures to stabilize the economy. So a lot of things to focus on in the day and the rest of the week ahead. But before I leave you, I just wanted to point out that my colleague Trung, she's launched the first episode of a new podcast called Invest Steps. And in this first episode, she answers the all-important question of why it's never too late to start investing. So that's it for today. If you enjoyed this podcast, please don't forget to rate and like it. Thanks again for listening, and we wish you a happy trading week ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.